Good day, everyone. I'm just actually making a video on the US 10-year bond. Look, the rise of the 10-year bond is normally a strong indication of something bad that's going to happen. The 10-year bond have actually a very good track record of predicting these things that is about to happen. Now, for a lot of people, that I need to explain quickly about the bond market, especially the US 10-year bond is actually one of the biggest markets in the world. There's also other bonds like the US 30-year, 2-year, 5-year bond, but normally the 10-year is one of the biggest one where everybody actually look for safety. Now, the difference between the bond market and the stock market, like normally in times that the global growth are growing, economies are booming, and all of those things, then people don't actually go for safety. They actually leave the bond market alone, and they normally move into more riskier assets, which is your equities in companies, buy shares and those type of things. So when turmoil is about to happen, then people move rather to your more safety asset, which is now the US 10-year bond. Now that's why the yield of the US 10-year bond is being flying now for the last 2 weeks now. That is actually being going up. Now, there's a lot of speculation. Is the 10-year bond is going up due to the high oil price that causes inflation, CPI, I'll be specific, inflation, or what is the bond market actually going up? Now, there is something that actually bothers me because I don't see actually a threat of inflation. Actually, it's not like what we had or what actually was experienced in the late 1970s, where you have an inflationary recession that actually happened. And now that actually happened due to a shortage of oil in the United States. And that actually pushed up inflation, and that also pushed up the gold price also and the bond market. But gold was actually the one that outperformed everything at that time in the late 1970s. This time around, the gold price is actually going down and the bond yields are going up with the dollar. And now, this for me is more of a deflationary pressure. I don't think this is an inflation story, because then that will have resembled the gold price to go up. But when you have deflation, people are more keen of holding on to cash or to bonds. So I don't think this is an inflationary story as in the late 1970s. This is a deflationary situation, and normally when you have a deflation situation, that leads normally to a depression. What the history books are saying in the 1929, that actually makes more sense to me, where we have a deflationary story like in the Great Depression in 1929. So the bond yields going up, so which means people prefer either to buy the bonds or store the cash themselves. And that's why you have the rise of the dollar. Now, why is the dollar is rising? Because people take their money out of the equity market, people take their money out of stocks. People are just not spending entirely, so people are hoarding money, basically dollars. They're keeping the money. So that means there will become a shortage of dollars, which happened in 2008, where there was a shortage of dollars, where they need to drop the interest rates, make money available with QE and all of those things, and pump money into the system, because there was a shortage of dollars, because people were rather hoarding the money or store the money into the bond market. So there was a lack of dollars in the world because people were saving the money, and that's why you have a deflationary pressure. Now, this looks basically the same. People are doing exactly the same. They're storing the money in the bond market, create a shortage basically of dollars, and that actually create the dollar to go up. Now that will be like a catastrophe if that, well, as I predicted in my book, that it will happen, but it will be a massive blow. When there's a shortage of money, then it means money will become more in demand, and that is why the dollar is going up. Now that will crash basically everything. The equity market already is been going down since Friday. Although yesterday it showed a reverse, but as I saw now, there was actually the Dow Jones starting to go down. The Nasdaq it's actually sinking. The other one was the S&P 500. So when there's a shortage of dollars in the world, then basically everything crashed. The housing markets crash, especially in the US and across the world, because the world also needs some dollars. So your equity market crash, your commodities, the house market, because there's a shortage of money. So when there's a shortage of money, people don't have money to spend. So which means that there's no demand for goods and services. So that will lead actually to one massive depression. That's why I call this actually the ultimate depression that is about to erupt. Now, that is actually the rise of the 10-year that actually creates a shortage of money floating around. For South Africa, that means also that the rand will get weaker, which means we will get another oil price hike that's going to be in November, and it will just get worse. Now, my personal advice for people is like really, you have to turn the screws. You have to stop. Basically, just stop spending. You have to now reserve cash, or basically you have to put measures in to survive, basically. For that times where you have a luxury Christmas, where you have lamb and all of those things, look, it will not be a shame if you just eat eggs or basically just bread on a Christmas day. There's no shame in that, because things will get tougher as it is already. The things will get worse and worse and worse. So for you, please stop living on the limelight now, as I've been saying for the last few years now. You don't have to show off. A lot of South Africans just don't have the cash anymore. So you don't have to show off. Look, if you have to eat your bread every night, that is fine. You will not die. You will maybe lose some weight, or maybe it's good, but you will not actually die. You have to store money now, or save money for a massive 5 years that will lay ahead of basically no growth. In South Africa, there's nothing that's basically going on here. So you have to keep the money. And if you have savings somewhere, don't use it. Just don't use it. Leave it rather there. What is the use now? You take out your savings, you spend it in basically for the time now for December, and then you have nothing left. You have to look after yourself. So if you have savings, rather leave it alone. Don't touch it. Rather move around it, but don't touch it, because it will be 5 years of absolutely nothing that's going on. So keep your money safe. If you have dollars, good, store it, keep it. Don't use it. Just don't use it. And save for survival. The 10-year bond it's basically at an high that we last see in 2011, and basically people are just hoarding cash. So this means you need also now to save cash, because everybody's doing it. So just save cash, spend less, and just buy the essentials, and just store the cash, because things will get rough. For people that are trading like me, it will be Christmas on the dollar side, as I always been saying. Just pile up the dollars as you were trading, and just stick with it. Look, there's turmoil all over. Brazil, China is being terrible. Japan, Europe, all of it is bad outside. So the best thing for you is basically to keep the dollars. There's no growth anywhere. Trade wars and all of those things. So Europe is dead. Brazil, Argentina, South Africa, Australia, Canada, everybody is basically going through a massive turmoil period that is about to come. So for you, just save up, store the cash rather, don't use it. This will be 5 years of bad economic data that will be coming. And this will definitely, as I've always been saying, this will be the ultimate depression. So please, people, keep safe and save the cash. I always been saying it, but please do it. Thanks a lot for listening, and have a lovely one. Bye-bye.